Despite the move today, those major averages facing their worst monthly performance since March 2020. Joining us now is Jeremy Schwartz, WisdomTree Global Chief Investment Officer. Jeremy, it is great to see you. So we did have, Jeremy, some high-profile strategists weighing in today, making some changes, Jeremy, and it made some headlines. And I'm interested to get your take. One was Goldman Sachs, Jeremy. I don't know if you saw this one, but they now project benchmark gauge will end the year at 5,700. And they told their clients these estimates incorporated downward revisions to both earnings growth and valuations, reflecting a weaker base case economic growth backdrop, higher uncertainty, and higher recession risk. I'm curious, Jeremy, you hear those headlines. Do they dovetail with your own expectations, Jeremy? What did you make of them?
It's very interesting. We were calling for a bit of a correction this year, and we had some fears on where earnings expectations too high and that we actually thought rates could pressure higher. And so you're definitely getting some of the questions on earnings, and now rates have gone lower. So actually our view is that rates could pressure the valuation environment, and it's really not gone that way. I think the really interesting is you hear all this uncertainty over tariffs. It's really the rotation from growth to value has been in full force. And so some of that has policy related, but some of it's just a move from the AI narratives and what's been driving the stocks fundamentally. So even more so than all this uncertainty over policy is also just the real change in what's driving markets. You're going from US to Europe as another example. And I heard some of the questions of, will we get the certainty on Wednesday and clarity? I think you could still have a bit of uncertainty post this month. I'm not sure we're gonna get all the clarity we all desire. I think this stuff could go in iteration after iteration for some time. The markets clearly don't like tariffs, but what's going on in the markets are beyond that with this other rotation.
And Jeremy, you mentioned tariffs spark interest in international equities. How much of that do you think has to do with currency versus the underlying strength of some of these international equities that you mentioned?
Well, it goes to that Trump is using tariffs, even when you just talked about the Russia tariffs and the secondary on oil and this Venezuela, you're gonna have tariffs on the Venezuelan oil imports. He's trying to do a lot of things, and it's beyond the tariff policy. The European defense, as an example, he's sort of reignited the Europeans in sort of trying to defend themselves. Pay for your own defense. We're not gonna pay for you as the world's policeman anymore. When you look at how much debt we have accumulated, I saw some estimates from my friend Jim Bianco, who said 2/3 of the debt was from being a defense spending. Well, now we don't want to do that anymore. You're going to have to go pay for your own defense. Well, now what the hottest trade of the year has been European defense stocks and Europe in general, that we're going to reignite their own sort of fiscal spending on defense, and it's sort of catalyzed. You're seeing Germany outperform. You're seeing Europe perform better than the US in some of that rotation. We're seeing individual investors in Europe move from US to European stocks. So there's a lot more than just tariffs that's causing this big shift.
And Jeremy, you specifically call out long-term potential in India and Japan. Why those two markets specifically?
Well, I think they're the very nice barbell of growth and value. So India is sort of this long-term growth story. Japan is value. You got Buffett buying Japan. They've been our two favorite markets. Actually, Buffett increased his stake recently in those 5 trading companies he's been shareholders of. It's been one of the cheapest markets. There's still some very attractive carry. When you hedge the currency, you get paid 3 to 4% by doing that. And so I like the combination of our allies in Asia. This confrontation with China, I think, is going to be ongoing. I think that's the one market where there's been some excitement, people saying they're no longer battling their tech stocks. I'm still very cautious long-term on China. And so I think this confrontation plays out, and India and Japan are winners over time. And so you got this growth value combination, and those are the two markets I like best.
Yeah, Jeremy, you mentioned China, and the Chinese government has taken a more constructive stance on their big tech companies, especially with the emergence of DeepSeek kind of proving what they can do in the tech space. Can you talk a little bit more about how you see Chinese AI and tech coming into play, and whether you like that area or not?
Well, that's also what caused NVIDIA to sell off and spark some of the rotation here, is when the DeepSeek model came out, there's this whole question of, will we be using a lot less chips than we thought we were before? And now you've got other questions on, is China going to clamp down on their own imports of NVIDIA chips as much as we've been trying to not let them get some of the NVIDIA chips? So there's all these questions now on NVIDIA. It used to be a very expensive stock. It's come way down. But I think, the China a few years ago, with this talk of common prosperity, started clamping down on their own tech companies. And it was this question of like, will they let them have success? Was like one of those own internal questions. And they're starting to realize they need some of these tech companies in the long-term shift, and they're trying to become friendlier to the big tech companies. We are, on an economic standpoint, we think they have this overhang from real estate that's going to be very long-term. So we're not overly bullish their economy. And then I think there's going to be this trade tension, trade negotiation. There's going to be some on again, off again. Will we get a deal with China? Can Trump be a deal maker for China? And we'll see some of those headlines go back and forth throughout this year. But I think long term it's a challenge, and I do think they're showing some very tech prowess. That DeepSeek news was very positive for their own capabilities, and people see Baba, Tencent, and these big China tech leaders have some really interesting technology they can build upon.
Jeremy, finally, I want to get your take on gold. Touches a new high. Metal continues to glitter. Jeremy, why does it continue to glitter in your opinion? And what's the message we should be taking away as investors?
It's been amazing. I heard your reporter talk about some of the flows. I'd say the flows have been quite disappointing given the move. When I look at what drove Bitcoin last year, the Bitcoin ETFs came to market, huge flows to Bitcoin ETFs, and I think that was definitely driving the Bitcoin last year. And this year, there's been 2 years, the 3-month gains in gold has been very high. It was definitely central bankers last year. I don't think a lot of ETF investors participated. This year, maybe a little bit more, but still, I think people have been underallocated to commodities generally. Gold stands out as the commodity people have some exposure to. We've tried to package gold on top of things like the S&P 500, where we have what we call capital efficient core. We have a ticker GDE, which is our U.S. large cap plus gold for people who don't want to give up on their U.S. equities. I think that's the biggest question on if you try to put in a portfolio, where do you fund it from? Do you sell stocks? Do you sell bonds? If you just put it on top of the S&P with this capital efficient nature, I think that's sort of a more interesting way to do it. But I think people still can allocate a lot more to gold in portfolios than they typically have.
Jeremy, it's always great to see you and have you on the show. Thanks for joining us.
Thanks so much for having me.